Okay. All right. All right. All right. All right. All right. All right. Mm, mm, mm. Probably a bullish trend. Ooh, ooh. Mm. And maybe just a bot. Hey, yo, what's up, Vesper Z? What's up? Was you able to capitalize on that move this morning? Gold is just trending as always, man. Gold has just been trending back and forth. Hey, yo, what's up, Cave Trader? Energy. That's good to hear. Hold on. So you said that you said no, you were trying you was trying to go long and blew the accounting process. Yeah. Yeah, the Nasdaq that was nasty this morning. So yeah, that was nasty this morning. A lot of people got trapped in this. So apparently Nvidia has reached a 4 trillion market cap, which I don't see what the big news about that is or why everybody's making a big deal about that. It's Nvidia. Uh, we live in an AI driven world, so I mean, I don't know why anybody would think that's something to be surprised of. Actually, let me ask my AI assistant, Mr. Make Me Money, because I believe Apple is up there too. Okay. All right. All right. So, I stand corrected. My AI assistant, Mr. Make Me Money, has said that Apple had a market capitalization of approximately $3.15 trillion, and Nvidia becoming the first company to reach 4 trillion in market cap. Crazy. So I guess that's why it was a big deal. So that was the buy the rumor and sell the news right there. I mean, I think that was probably a great example of that. This big ass pop up, and if there's no price action, it's going to come down the same way. So trying to buy something where it goes straight up, that's always a recipe for disaster. Always a recipe for disaster. I don't think I've seen a situation where the market has gone up like this and the bulls were able to find support. I don't think I've seen that. And if it does happen, then that means that there's other factors that are in play because that it usually doesn't happen. If we really think about what happened, if we really think about what happened, we have to really go back and look at what happened with the yesterday's price action. Um, I talked about this on my NA meeting video, but look at what happened. Even though yesterday's price action killed a lot of people's accounts, including one of mine, I hit daily loss limit on 3 accounts, and I blew a funded. And yesterday's price action was definitely brutal for a lot of people. But after the price action was printed on the chart, you can see that price traded in this defined range the entire session. So when price trades like this and you have aggressors on both sides of the market, we all know that whichever side the market breaks out of first, that's usually the side where we see a big move to the upside. And that's all this was. Yeah, Nvidia becoming the first company with a $4 trillion market cap was the catalyst. But the price action was always suggesting that we were going to get that big move higher because all price did was break out above the range. And then look where it pulls back. It pulls right back into the range for a retest of that high. So because this consistently happens, I don't particularly follow the news. Usually, if I hear about something, it's the news has already happened. But what I consistently see is that if you just trade the price action, the news just facilitates the trade. That's all it does. We was always going to get this big move up, regardless if it was Nvidia. If they said that Trump did a backflip on the White House lawn, he was going to get this to push up. So I wasn't surprised by this. Uh, I was able to capitalize on this before I was able to go to my appointment today. I saw that the market was going up, and you know, this is what I will say. Now that I've reduced my size to a maximum of only 7 micro contracts at a time, and being okay with my losses and seeing them as a business expense, an expense of doing business. I'm taking I see myself taking a lot more setups that I normally would not take if I had size. What size did for me was it allowed me to do one trade a day. I was able to make all my money, and I don't have to think about the market at all. But there were many times where I saw a setup happen. I would overthink, second guess, and I would miss the trade completely. And depending on how I reacted to that, my follow up trade would be somewhat fueled by FOMO because I missed that first opportunity. So that second trade will necessarily well actually it would be. I'm not gonna sit here and say that it's not. It's gonna be fueled by FOMO, and those are usually the trades that don't tend to work out. So I took a trade that I saw that it was building up support. I just put my I think it was actually right here. Right before the move happened, I saw that the market was consolidating in this little tight range right here. I didn't expect for it to be this strong of a move higher. All I saw was the market consolidating at that high. So I was like, you know what? I'm gonna put my entry right here. I'm gonna put my stop underneath this low, and I'm just gonna see what happens. And good thing I did because I was able to capitalize on this move. And I wouldn't have put that limit if I was in like minis and stuff. I would have waited for the pullback. But you can see that it kind of missed my short entry right here by 10 points. I figured that they would come back up into this range right here. I don't know if you guys can see that. I figured that price would come back into this range, and then, we get this pullback because it's not a sell off yet. Price has not broken structure yet. It does appear that we could potentially see a break of structure to the downside, but it hasn't done it yet. So technically, we have to give the bulls the benefit of the doubt. I do think that we do have a trend line break, though. We do have a trend line break, I think. And something else that I've realized is that now that I'm trading the smaller size, now my mindset has shifted back to now I have to catch bigger moves to make money. My focus is to make $630 per trade. On the Nasdaq with 7 contracts, that's 45 points. With a 27-point stop, 45 points. That's close to a 1 to 2, but it's not really. And I get the 63 points and or the 63 $630. And if I take multiple winning trades, those $600 trades will add up. And I'm gonna use that moving forward. Cave Trader, you said that you started a new system. What is your new system, if you don't mind sharing? What are you looking for now before you place a trade? What is your new entry model? Yeah, Investor Z. That's what the market is using as an excuse as to why we saw that big push up, but it was going to happen anyway. It was going to happen anyway. That tight range from yesterday's session suggested that we was going to see that. And we do have a trend line. We do have the bulls failing. I apologize. We do have the bears failing to break that trend line. So right now we have to give the bulls the benefit of the doubt. Actually, let me take this off because this short limit was looking for this move down. Since the move already happened, I'm just gonna cancel that order because this was the move I was looking for. and but unfortunately I didn't get it. Honestly, what I probably could do is probably I probably could do is yeah, it's not gonna hold me hostage, and I'm not going to. And the one time I don't want to use it, the time I grab it. 983. Support and resistance zone. Hmm. Okay. So you're trading oil as well, huh? Mm. Actually, I'm gonna pull that order too. I will leave this order down here though. I think the market will probably, because I mean, it has been using the previous week's close as support and resistance. So I think that if price does come down, it'll probably react at this level, and we'll probably see just like a push back up. So I'm gonna leave this right here. And if this position loses, I'll just accept it. And I think what makes trading this size optimal is that I'm not going to get emotional about losing $300 because uh, I believe this is a $315 loss if it hits my stop, which I can recover from a $300 move. And yeah, it's $315. Actually, it might be a little bit more than that. It actually might be 320 or 330 or some shit like that. This is a 27-point stop. Yeah, it's a $378 loss. Actually, probably what I should do is let me see. Does $63 mean something? Hmm. Hmm. Well, I guess I'll leave it the way it is. We'll see. We'll see. Honestly, I kind of want to get to a point to where I'm only risking 18 points of I really want to get to a point where I'm only risking 18 points of risk. Yeah, K trader. I definitely agree with that. I was actually thinking about that as well. If I shift my mindset when it comes to these accounts, instead of trying to get my money back by going tilt and throwing a tantrum and going tilt, because if I'm sized properly, uh, if I'm down at using your drawdown as an example of $1,000, if I'm sized correctly, if I'm managing my risk correctly, that's if I lose $1,000, that means I lost three, almost what, 3.5 trades, 3 to 4 trades. Yeah, it's about like 3.5. I mean, I know that doesn't make sense at 3.5 trades, but I mean, we all get the picture, or we all get the point. So that means I took 3 bad setups before I got to 1,000 until I was down $1,000, and then I had to ask myself, how did I lose 3 trades in a row? That means I need to go back to the drawing boards and figure out what I'm doing wrong. And that's the great thing about having a system, and just like Cave Trader says, having a system. I'm sorry, a systematic trading style. Because now with that mindset, I'm not looking at, oh man, I have $2,500 of drawdown. I'm looking at it as if I only have 7 bad trades in a row before I lose this account. So if I take 7 bad positions, then I have to start over. And I can I can understand maybe 1 or 2, but if I'm taking 7 bad trades, then that means I need to go back to the drawing board. That's exactly what that means. Yep. Yeah, that's it. That's exactly true, Cave Trader. Yeah, trying to get out of that gambling habit. Now that I've sized down, now I trade the Nasdaq again. As crazy as that sounds, because I was so adamant about not trading her ever again. But 45 points on the Nasdaq is easy. Losing 27 points, I have to be wrong. I have a strategy with the Nasdaq. If I just trade the Nasdaq the same way I trade gold and the ES and not jump in without any confirmation or anything like that, then the Nasdaq is not that big of a deal. But like I said, trading 7 contracts, it does give me a lot of room for error versus trading my normal size, the heavy size. And it forces me to focus on uh, the setup. Now, shit, if I took this orb today, we all know that we have to wait for that pullback to the orb. I mean, that orb 971. Yeah, I mean, that orb would have been a winner to the up and downside today. Or actually, shit, if you didn't take that orb to the upside, yeah, if you took it to the upside today and you just trusted it, mm, man, I mean, it was a decent winner. It was a decent winner, but that's not how we trade the orb. We would have missed the one to the upside, but we would have gotten the one to the downside. Waiting for that pullback to the 21 EMA as the Nasdaq consistently does. That pullback to the 21 EMA, uh, that right there is a strategy within itself. That is a strategy within itself. I mean, if you miss that 21 EMA pullback, well, then it's just best to just wait for another setup, because that is consistent. If this is going to work, it will pull back, or it's highly likely to pull back to the 21 EMA. And it pulled back just enough to be able to get a nice clean winner. 915, 970. Let's see how much that is. Yeah, so about a 55-point move down. That's respectable in Nasdaq. 55 on one contract. That's about what, $1,100. Yeah. Yep. $1,100 exactly. Shit. Let me go get a lottery ticket because I just straight up guessed that. Let me get a lottery ticket. But yeah. And what's up, Metal Mind? Yeah, Metal Mind, I've been doing the same thing, man. I've been doing the same thing with these Apex accounts. Getting in with heavy size, knowing my trading style, and those pullbacks are brutal. I actually lost two accounts like that, I believe last week, where I was positive. I think I was up $2,000 or $3,000. It pulls back before hitting my target, and then instead of continuing, I think no, it happened yesterday. Yeah, it happened yesterday. Yeah, never mind. Or yeah, was it yesterday? It was. Yeah, I think it happened yesterday. It was one of these days. It happened on gold and it happened on Nasdaq. Gold, for whatever reason, didn't finish the move, and it pulled back and stopped me out. So I was up 3,000. It came back three, or yeah, it came back 3 or 2,000, and and blew the account that way. So yeah, yep, I did that too, Metal Mind. Ah, shit, I did that too, dude. Like that's why. Yeah, I'm done. I'm done with the heavy size. I'm done with the heavy size. Um, Honestly, the number doesn't do anything for me anyway. It really doesn't. Right now, the focus is on the longevity of the account. I don't care how much money I make at one time. I only care about the longevity of the account now. I want to have this account more than a week, build it up over at least a month, and carry this for multiple months. And as my equity grow, then I'll consider sizing up. But at the same time, I probably won't. I probably just keep the 7 micros. It's good risk to reward. I'm not emotionally attached to any of the movements. Uh, I don't feel like somebody is churning my gut because price pulls back because I'm super heavy. I see a pullback to my break even. It's like, you know what? I was only up $200 or $300. I mean, I'm not about to cry about that shit. Um, but if it hits my target at 45 points, I make $630, and that's decent. I think $630 is decent. 45 points. If I see another setup, I mean, I can take that setup too. So, what this does, trading smaller size, is that I can be more versatile. I can trade. If I see a gold setup, I can trade the gold setup. If I see an ES setup, well, let me actually pull back. So, the ES, if I continue to trade the ES is the only one that I have to trade 3, 5 minis on it just to make money. The ES is, I mean, it's too much work with one contract to make money on ES. You need what, 13 points to make $600 to $700 on the ES with one contract, and the ES doesn't give 13 points easy. So if you want to make money on the ES, you kind of have to trade with at least two minis, at least to make some money. But depending on what your risk tolerance and what you're looking for, maybe that's not what's the word I'm looking for? Maybe that's not true for you. Maybe you just want to make $100 a day. Maybe you just want to make $500 a day, which is or $450, which is 9 points, which is very achievable on the ES. You can get 9 points on one contract. That's $450. You can get that. I mean, if that's your profit goal, then yeah. I mean, the ES is definitely doable with one contract, but with all the calculations that I've made, $600, 600 to $700 is the ideal amount. That with this with consistency rules, and with the time frame, at the end of that quote unquote probationary period, because they make you trade for 7, 10, however many days that they want you to trade before you're eligible for a payout. That 600 to 700 profit target usually gets you above that threshold, and it gets you a nice decent $2,000 to $3,000 in a payout once you reach it. So $400, $500 is just not going to cut it. I need to make at least 630 to about $720 to get to that threshold. Obviously, for bigger accounts, you kind of need to double that. Uh, you need to make at least $1,300 for the 150Ks. You need to at least make 1,300 to be able to get to that to get past the threshold and to be able to take a nice decent payout. So that's the only account that I trade on. That's the only account that I trade on Apex. He says watch. Okay, I'll watch it. I'll watch it. That's the only account that I trade on Apex. The 300Ks are the well. I got a couple of 250s. Because that's what Apex was offering during their last 90% deal. I will say that the 250s and the 300Ks are definitely like that extra $1,500 of drawdown is actually pretty crucial. I bought those accounts. I went till in them and I instantly blew them. Like that, like $6,000 for some reason. It as crazy as 6,000 is hard to make. Well, I guess it is trailing drawdown. So I mean, it doesn't need to make 6,000 going up. It just needs to go up 3,000 and come back down 3,000, which is kind of easy. But excuse me. Um, yeah, those accounts blew really fast, faster than what I'm used to with the 300Ks, and I was like, damn. I guess that $1,500 actually does make a difference because shit, they did not last. At least with the 300Ks, uh, your drawdown will dance around that 7,000 mark, but price usually reverses, and you can kind of save yourself. But with them 250Ks, that shit was gone. I was like, God damn, I just got these accounts. I just paid for them. Them shit was gone. So, but like I said, moving forward, 7 micro contracts. Even in these 300K accounts, I'm only trading the 7 micro contracts. I'll just take more trades across different instruments. And I'm just going to wait for my entry model, which is this right here. If I was in front of my desk, I would have bought this pullback right here. I would have bought this on the Nasdaq. It fits my entry model perfectly. A strong move in one direction and a pullback back into support, back into this range. I would have bought that. if I was in front of my desk. I think for the ICT traders, this would be the unicorn model. Honestly, I don't know what that is, but from the videos that I've seen, this is very similar. I guess a big move is going to create what is it, a block? I mean, well, I guess I could ask Mr. Make Me Rich. What's the unicorn model? All right, Mr. Make Me Rich. All right. Uh, oh, that's interesting. So I put in what is the unicorn model, and it's telling me about that the unicorn model refers to the business and growth approach to a privately held startup valued at $1 billion before going public or being acquired. Mm. So yeah, so it's looking for a fair value gap in a breaker block, a level or prior support or resistance that is invalidated by a strong price move and that acts as the opposite. Support becomes resistance or vice versa. That's all I had to say. So all the extra shit. Breaker blocks are seen as areas of institutional interest and are important for identifying reversals or continuations. So support or resistance becomes support. So I'm going to make the assumption that this area right here, which was once resistance, being turned around and becoming support, and that there should be a fair value gap and a breaker block in the same area, which would suggest that price would have no choice but to move in your intended direction. That makes sense. That definitely makes sense. It definitely makes sense. You're not going to see a big move up like that, and price not pull back into support. I mean, that's a classic break and retest. Uh, that's a classic break and retest. That's classic price action. You're going to see a price pull back to the area of origin, and 9 times out of 10, the market is going to participate in those areas. If not a retest of prior swings, and possibly a retest of the high, depending on the price action following the high. You're going to at least get a swing. Right here, you got price swinging and then price coming back up and selling it. You're going to get price to at least retest this. And as you can actually see it, is actually as we talk about it, you can actually see it happen. You can see it play out in the price action, actually. Uh, so you got a big move down, a swing, a break. This is where they bought it, and look at where they take their profits at, right there at that high. You're at this is probably like the most classic profit targets is a retest of that high. That is a classic area where people take profits after you get a price to retest a prior area of support. And if you pay attention and look at this, you can see that they used this area of resistance and then they broke above it. They broke above it. And the Bulls failed to buy the retest here. They're trying to buy the retest. We do got this trend line coming up. And we got this triangle right here. Mm. So we'll see what happens here. We'll see. Metal Mind. Shit, I think we've all blown that much. I think. Shit. What's that movie? Wolf of Wall Street's. Those are rookie numbers. Get your numbers up. I think we all have blown that many. Shit, I don't. I think I'm on. Actually, what number am I on? I don't know if. So this is what. Count 200. Man, shit. I need to get my numbers up then, huh? If this is if this is my 200th Apex account, shit, I need to get my numbers up, huh? Over the course of 2 years. Yeah, I stopped trading Apexes for a while. I just went back trading them last year, trading with them last year. That trailing drawdown was killing me. It was killing me. Uh I was not finding the success trading Apex with the trailing drawdown and my aggressive trading style. I would get to the PAs, and then as soon as I get into the PA, thinking about the payout, not thinking that Apex has a 35% consistency rule. So if you pop out on your first day in the PA account and make $10,000, you have to you have to stay within that 35% consistency rule. So you got to make $10,000 at least to maintain that consistency rule. But according to Apex, what a lot of people would do is that they would game the system by actually getting the $10,000, uh, trading enough to build the account, like making $200 a day. And at the 30th day, where you can take out 100% of your balance, that's what people were doing. They were doing that. They were just playing the long game instead of saying, well, I don't have to play this 35% consistency rule. I'll just withdraw 100% of my profits once the that time limit is up. I believe it's 30 days. Let's actually ask. Apex is like, yo, these scammers. So as after 48 days of trading, according to this search tool, is saying that after 48 days of trading, they can withdraw 100% of their balance. Hmm. Oh, actually, I don't know. They made a statement that uh I guess they didn't like people gaming the system, but you can't do that. You can't. Well, I guess they can. It's their business, and either you're gonna buy an account or not. But if you set the rules and we playing by the rules that you set, and it would just look bad on their part if you're just gonna keep adjusting the rules to make it harder for traders to withdraw. It would just look bad on Apex's part. But I guess enough about that. Let's get this homework done. Let's get this thing done before. And unfortunately, I promise this is not a habit. I promise. But my daughter has an appointment tomorrow again. So I have another doctor's appointment to be at tomorrow. So I won't be doing the morning stream again. And I promise this is not a habit. I hate missing the morning stream. I hate it. I absolutely hate it because it just keeps me consistent and it keeps me focused. But I go to the stupid doctor's appointment for my daughter. And these doctors like to set them all early in the morning instead of having having appointments in the afternoon. But okay. So get the I wasn't able to get the mm, it says does TJR strategy work? Who's TJR? I'm not familiar with who that is. Who's that? TJR. I'm not familiar. And what I will say, Tristan, is that mm, there's a lot of people that speak confidently. They say that they have a winning strategy, and yet their quote unquote winning strategy only works in one market condition. Or let's just say it like this: people say that they have winning strategies that work just enough for them to collect premium from maybe their Discord, their boot camps, their courses, whatever. Whatever. These strategies work long enough just for that to happen. What I find to be consistently true is that if you stick to the way that these institutional traders are trading, if you stick to regular price action, kind of like, hold on, June 9th, something like this, like we're talking about right now. If you stick to just paying attention to what's happening on the chart and trading alongside with these institutions, I feel that that strategy right there is going to be consistent in any market condition. It's consistent. When you deviate from that plan, that's usually when, or at least for me personally, is when I start to see my losses when I deviate from the price action. Trying to scalp, trying to be cute, trying to front run levels. And the thing is that these institutions, they have such big size. They trade 100 lots, 1,000 lots. They need liquidity to fill their orders. So front running levels, I mean, you'll get times where price front runs a level and then it'll come back and then fill that level and then we'll see the market makes the real move. But this is all institutional. They need to collect as much liquidity as possible before they make their move. And if you're just patient and wait for it, and when I was back testing this yesterday, I was like, man, the thing was here the whole time. If I just kind of just waited for it, you can just see that look how many times it taps that area right there on the Nasdaq. Look how many times it taps it. Price breaks out of this range, it pulls back into this range, and it retests the orb high. Price rejects off of the orb high, comes right back into this range, and once they sweep liquidity underneath this low, and then we see the move up. If you wait for the price action to set up and you see stuff like that happen, this is the strategy that I see that works consistently in any market condition. The only downside to trading this way is that you have to be patient. You just have to be patient. You allowing FOMO to dictate impulses to get into a trade, even though the setup's not there. That's why stuff like this, or let me rephrase that. why somebody would say, oh, price action doesn't work. Well, you kind of got in at the wrong area and you became liquidity versus actually trading with the institutions themselves. Because if you look back on the chart, I mean, this range was here the whole time. It was there the whole time. And price definitely broke out from the range. It pulled right back into the range. We saw the reaction. They dipped right back into this range. They took out that swing high. They dipped back into the same range. And then we got that move higher. So, I mean, and then look at this. Price comes right back into this range again. And then we get that big move to the upside. So this range right here was very important. And I noticed this yesterday as I was back testing, and I was kind of kicking myself in the butt yesterday because I wanted to scalp, or I was focusing on the orb instead of just actually looking at the market structure because it was always there. So so yeah, I was kicking myself in the butt. I was telling my trading partner that yesterday, or actually today. I was talking to, I was like, man, that shit was there the whole fucking time. It was hitting levels perfectly. It's just that for whatever reason I became impatient and yeah, so anyway. Anyway, it's always going to be emotions that's going to I guess as Mike Tyson says, all it takes is for you to get hit in the face and then there goes your plan, right? It says all depends if you can stick to the system, remain disciplined. Yep, that's exactly right, man of mine. Yep. So Tristan, if I started over, what I just explained is exactly what I would be doing. Focusing on the price action, focusing on the chart geometry, and trusting the charts, and sticking to smaller size. Sticking to smaller size is probably the biggest adjustment that I would make because over time, I see that like this strategy, I'm waiting for it to pull back. It fills my order, and then it moves up 100 points. But I'm in 7 micro contracts, right? If I was in 7 minis, oh man, that would be 20K, that would be 30K, blah blah blah, however much that is, right? As just as an exaggerated example. But uh I guess for me personally, we made $20,000 multiple times in a position. And and when we made the $20,000 in the position, it wasn't even enough. It wasn't enough. We had multiple days where we made 20, 30. I think I had a $60,000 day. And that did nothing to me. Like it wasn't even enough. And I really had to self-reflect on that. It wasn't even enough. That was like probably my biggest trading day. And it wasn't enough. It was not enough. So honestly, I told myself, well, you know what? If that's not enough, then I'm not trading big. I'm not trading heavy anymore. Or at least that was the start of the conversation with myself, because if I can't be proud of myself about that and I'm still saying more, 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 then I'm gambling, and I can't even sit here and say that I'm not, because only gamblers don't appreciate the money that they win. Because if they appreciated the money that they won, they would stop, but they keep going, and then they eventually lose it all. So, so I'm just sticking with the small size. So kind of just to go back over what I said, I would focus on the price action. I would wait for the strong move and the pullback into support. I will pay attention to ranges, range breakouts, range uh, uh retest, trading the retest, because trading that retest is usually the easiest A plus, S rank trade that there is. It's a classic break. Retest trades are so profitable. This is the only trade that you need. I can sit here and show you about 10 million break and retests on this chart that you can trade. You break from a range right here. This is a good one. Pulls back into support, and you got a nice clean winner. Break, pull back into support, nice clean winner. Break, pull back into support, nice clean winner. You even got a double bottom right here, retested right there. We got this big one right here, a break, retest. You can see it from that low right there. Nice winner. So that's what I would do differently if I can learn again. If I can do everything again, all the money that I wasted gambling, I would do it that way. Hopefully that helps. Or actually, yeah, this is another one right here. Break of the range, pull back. I mean, this one's a perfect one. It love tapped that range, and you got a nice clean winner down. That break and retest is the trade for beginners. Honestly, I think that's the only trade you really need for real. I mean, why do you need anything else? If it's not broken, why fix it? All right, so I'm gonna do this. I mean, shit, you're in the right place to learn it. You're in the right place to learn it. You're here. Moving forward, that's actually how. I mean, I do trade that way anyway, but there are times where I will start gambling. But honestly, I don't think I do that anymore. I think I'm kind of over gambling at this point. Yeah. You know what? Mm, this is what I'll do. This is a risk to reward trade right here. I see a breakout from a range and a pullback. The bulls are holding the trend line. I'm going to take this trade and put my stop underneath this candle. This is a risk to reward trade. I'm betting on the bulls holding this. I mean, if they don't, like I said, this will probably be a $200 loss right here. But this will be a $700 winner if the bulls can hold this trend line. So I'm going to take this trade, but I'm going to turn this off. All right. So let's hurry up and do this real quick because I got like 15. Well, we'll get it done. We'll get it done. All right. So the orb definitely was so I mean if you all right, so all right, so where's my box? All right. So that was a clean breakout. So about 8:45. Hmm. So about 8:45. All right. So the opening range was Opening range was 311, 2311. And then the high of that candle, or the high of that was 2364. 2364. So that was 47 points to the upside, which is a good winner right there, man. That's a good winner. And traded 45 points to the upside. To a previous resistance. So is that 927? So 927 and 936. So at 847. I I would think so. I'm pretty sure. Well, the terms that you're using aren't magic terms. Uh, those words. How do I want to say that? Mm, Let me think about that. But in a short answer, yes. Uh, what those terms are describing is price action, auction theory, and it's just turning complicated concepts into easily understandable concepts by calling them by specific names. A fair value gap, you don't have to know what that means, but you know that if you see a fair value gap on your chart, then it's highly likely that you'll see a reaction from other market participants. Especially in futures, the reason why gaps are trading gaps are so important. And this is actually a good example now that I'm looking at it. In futures, futures specifically do not like gaps whatsoever. And that's why your fair value gaps are, that's why they're called fair value, because price usually comes back and it fills those gaps. And this is going to be an area where you'll probably see a lot of unfilled orders. So when price comes back into this area, what it's doing is filling that gap and filling all those unfilled order, balancing out this area. And that's when you'll usually see price react. Now, you're not going to maybe see price make a big move the first time, but you can see in this area that price dipped into it, retested the highs. It dipped right back into this little fair value gap right here. And we saw price move to the upside. Obviously, that's not going to be the case every time, but the idea is that, like I said, if you see that on your chart, it's an area that other traders are going to be looking at. So either it's going to work or you're going to become liquidity. I mean, I think that's the most simplest way to put it. Either it's gonna work or you're gonna become liquidity. Uh, Let me see if I can find another like a gap, price action gap. Like right here was another price action gap right here. And you can see that it didn't work this time. Uh, liquidity got ran and it turned around and they broke price strike not price. They broke structure to the downside. So anyway, so it's not magical. You're not going to become a trillionaire trading ICT and the concepts that he's popularized. So I will always give ICT his credit. I don't think he's a good trader himself because he showcased that, but what he has done is created certain language that we all can use and we can all understand. And when we're talking about a specific area on the chart, if you're speaking with another ICT trader, it's like, yeah, I see a 4 hour fair value gap, and that's an area of interest. And then when they go on their chart, and it's like, oh yeah, I see that same fair value gap. Uh, if you're interested in that area, then let's trade it together and see what happens. He just like I said, uses these terms so you can have a conversation with other traders, so there's no confusion. And we have to give him props for that, regardless of how we feel about him. We have to give him props for that. So, um, all right. Kind of going back down. So at 8:47, the MNQ closed below the. And so it closed below trading. The low of that candle is 954. So 971, 954. Trading. So the low of that candle is 923. So 971 minus 923, 48 points to the downside. Okay. So, okay, get a couple of screenshots. Okay, get the screenshots going. Okay, so now Hold on, I just had a freaking brain fart right now. What the hell? Did I spell that right? Okay, it's just had a brain fart now. Liquidity sweep. Hmm. Okay. Cool. What else my damn thing? Okay. Cool. All right. And this orb, uh, is not a magical. It's not a magical box. This is just a range. Uh, just like any range, we'll see price sweep the highs and lows. We'll see a breakout. If this is a real breakout, the bulls or the bears will always hold the retest of that range breakout. And if, like I said, if it's real, you should be able to always trade that follow up. But usually with the range, especially with the Nasdaq, she does play around she actually before the range breakout actually means something. We do have days where the price action just breaks out and it pulls back, and we'll never see that pullback. And then we have days like kind of like with these days where she's had clean breakouts, and then we'll have days like yesterday and days like where she fakes out liquidity sweeps, fake breakouts, prices all over the place. Yeah, so you'll have days like that. But as long as we're managing our risk, uh, these range breakout trades are very profitable. Um, that's very profitable. Let's get that done. And like moving forward, I'm just finding ways to make this more efficient. I think it was yesterday, like yesterday's price action where it was all over the place. So I'm gonna just only document the first breakout to the upside, or I'm going to document the behavior before the first breakout to the upside. And if we get a breakout to the downside, I'm only going to document the first. I'm not going to document every time it breaks out of the range. I'm just going to only do the first. Just so the data could be valuable, because we shouldn't be trading during tilt trading hours after lunch. We all know after lunch that's tilt trading hours. You don't want to be in front of your desk after lunch. The liquidity is low. You have frustrated traders. Everybody's frustrated because they lost money in the New York session, so they're trying to make it back after lunch. Um, it's not a. I would never recommend trading after lunch. So I just kind of want to keep this simple, and I think documenting the how the orb behaves when there's the most liquidity in the market, I think that's the most valuable. So we'll just do that moving forward. And it just makes it everything less complicated. All right. So yeah, I wasn't able to get the range or the volume for today. Um, that's interesting. Well, I guess I'll change that over the weekend. Okay. And I think I probably might just initial sweep. So the initial sweep happened at 8:45. And I'll probably update some of these columns. The initial break, 8:45. I hate when it does that. Number. Okay, so successful breakout, 8:45. And 8:47. Or no, the breakout that was probably 9:50. Say that's like 9:50. That was like the real breakout. Break high and broke high and then it broke low. Okay. Initial reaction, clean break of structure. Entry drawdown. I think 4 pulling back. So if you took this one, so if you took the break of this one and pull back, actually it wasn't, yeah, it wasn't too much a drawdown right there. The high of that candle was 72, so it was a point in drawdown. It was a point in drawdown. The results, so we got 45 points on the first one. So 45 points. And we got 48 points to downside. I might actually just get rid of this column. Full move. No, yeah, that was a full move on both sides. Yeah, that was a full move on both sides. So 45, 48. All right, cool. All right. That's documented. And the reason why I take down this information is so I can just easily see that most often we are starting to get some clean breakouts from the Nasdaq. The initial reaction. I want to know what the initial reaction, what the Nasdaq normally does before actually breaking out. She usually does, or she has been having some false breakouts, but there has been some clean break of structure on the initial reaction. So, all right. Hey, yo, what's up, Santiago? You said, what is the strategy called? So, what I'm documenting is the orb strategy. You can see that on YouTube. You can find everything that on YouTube, but so basically, and I'll just make it simple. What this indicator is doing is creating a range of the first 15 minutes from New York Open. So from 8:30 to 8:45 Central Time, this range is being created. And the idea of this strategy is once the first 15 minutes range is formed, we're going to wait for a breakout to the upside, or we're going to wait for a breakdown to the downside. And what usually happens is once we get a break from either the high or the low, it should be a quick, easy win. And you can do this consistently every day. Not only can you take this trade consistently every day, But what it does is focus your trading to one point of the day. You don't have to look for trades in Asia, Sydney, or whatever it wants to be called. You can focus all your attention on the first 15 minutes of the New York session, which is very powerful. The reason why it's powerful is because what I just said, you don't have to, you know what time you're getting in the market, you know what time you're trading, and it just makes things easier. This strategy has been working. Alfred, he's showcased multiple payouts. He grew his account to about 15,000, 12,000. If I actually, let's look at that. He's been sharing his success with, yeah, he's been, and we've been showcasing his success on the stream. Uh, but yeah, he's grown his account just by simply trading this strategy. And I'm gonna share a screenshot that he shared with me. He's taken multiple payouts. Uh, but I think this is probably one of his biggest achievements, just taking the orb, 81% win rate, built his account up to $33,000, taking plenty of payouts, and the strategy works if it's done correctly. And what I'm doing is documenting it as we go, so we can become very efficient. And the one thing that is very consistent is that 21 EMA with this strategy. This orb is nothing without that 21 EMA to back it up. Nothing. We consistently see that in the data that we've taken so far. That 21 EMA, it pulls back to that 21 EMA, and we see the rejection. We pull back to the 21 EMA, we see the bounce. We pull back to the 21 EMA, we see the bounce. So that 21 EMA is definitely right here as well. Pull back to the 21 EMA, we see the rejection. So that has definitely been a consistent component with this range breakout. And if you don't see that happening, well, it's highly likely that it won't work. Okay, so I may be getting stopped out of this trade. Like I said, I think it's only a $200 loss if it fails. I mean, knowing the Nasdaq, it'll probably stop me out and go. But I'm okay with that. I can always make $200 back. I can always make it back. It's not a big deal. The reason why I took the trade is the Bulls did appear that they wanted to, or at least they're trying to hold this pullback. We have this support trend line coming up. We do have price closing underneath the trend line, but we all know how that shit goes with the Nasdaq. She likes to play these trend line games. So this was a risk to reward trade for me. The reward would have been my profit targets up here getting hit with a small loss if I'm wrong. So hopefully I'm not wrong, but I will accept if I am. So, but you say you gotta says Santiago says I trade 250K top step. I'm only $100 away from passing. Yo, congratulations on that. Um, do you have a? I mean, as crazy as it's gonna sound, do you have a strategy? I mean, I know that you're gonna trade your 50, but do you have a when are you going to try to get that $100? Hopefully you don't try to brute force it, because let's just be honest, when we're $100 away from passing the account, brute forcing that $100 usually tends to happen more often than we would like to admit. And for whatever reason, trying to get 100, we lose $10,000 just to try to make 100. So yeah, you're just going to use your 50, and it's going to work. That's definitely been a consistent strategy with Santiago. Santiago has also shared his strategy with the stream, where he waits for price to pull back to the 50 retracement, and he takes the trade. Man, he sees it pulls back to his 50, he takes the trade without thought. He manages his risk, and that's been working for him. This is what he's talking about. He waits till price pulls right back until his area of interest, and he takes the trade. He takes it. So that's a beautiful thing about the market, is that nobody has a 100% correct way of trading. As long as you can turn it into a system. I think Cave Trader would agree with this, but if you can't have a bot trade your system, then you don't have a system. If a bot can't trade it, you don't have it. You got to go back to the drawing boards if an algo can't take your system and be consistent. He says, so you have a 150K on TPT? Okay. Okay. All right. But okay. I'm out of time for this session. Yeah, unfortunately, again, I won't be able to do the morning stream tomorrow. I got a doctor's appointment for my daughter, so I guess I would look like an ass if I don't show up for that. So that's where I'll be at tomorrow. We'll definitely come back tomorrow evening for tomorrow evening stream for sure. So Santiago says back to work since these markets are crazy. Yeah. Yesterday was definitely a challenging day to trade the market. It was definitely challenging. All the forums, Top Step, Reddit, everybody was saying the same thing about how difficult it was to trade the market yesterday. Santiago, we actually talked about how price actually came back to this area, and I only saw this after I back tested this yesterday. This range right here, or where the hell is it at? Yeah, it was this range right here. I was When I was back testing, I saw it. We had a breakdown. It failed to break to the downside. It broke to the upside. The bulls came and bought the pullback, and this is what they were doing yesterday. And this is what they were doing. Or where is it at? No, that's not it. This is it right here. This is the range. Or hold on, where the hell is that range at? Where's that range? That's not it. That wasn't it right there. This was the range right here. This was the range that the market was reacting to all day yesterday. And when I saw that when I was back testing, I was telling Smith about it, and I was like, man, as crazy as this sounds, the market was literally just bouncing back into this level and using it as support. That's all it was doing all day. And you know that this was the range that the institutions were using, because they came right back into this range, and this is where we saw that move higher. Yeah. Yeah, Cave Trader. I just said something that you would agree with. I said that if a bot can't trade your system, then you don't have a system. If you can't automate your trades, you don't have a system. So you said the previous month high. Actually, wow. Actually, I think I already got that indicator on. Let me see. I could just turn it on real quick. Previous week. Oh, actually, I got the previous week. I thought I had the previous month. Let's actually look at that, and then that'll be the last thing we talk about. And actually, shit. Uh, yeah, that would have been interesting. So the previous month's high was this candle right here, or actually this candle. And the high of this candle was 934.75. So 934.75. Or 22,934.75. All right. Turn this off. And 934.75. So right around this area was right here. Actually, let's look at this on the hourly chart. Delete this off. Look at it on the hourly chart. Okay. So that's the previous month high right there. And you said no, I haven't looked at the video yet. Yeah, repost it. I wasn't. Yeah, I mean, I'm on the stream, so no, I wasn't able to watch it. I'll watch it after I'm done. Um, so let's put the previous month high on the chart, and you'll see a bounce from that for NQ. Put the magnet. I posted it. Okay, but yeah, so yeah, so 22,934 was the previous month's high, and Santiago says he'll put it in the Discord, so we'll wait for that. Mm, okay. Mm. All right, so we'll see if the bulls choose to reclaim price back above this range. We'll see if bears got too aggressive underneath this trend line, and we'll see if they'll be used as liquidity to push this market back higher to retest some of these swings. We'll see. Okay. So Santiago posted in the Discord. This is what he posted. Okay. All right. So the MNQ, it bounced off of the 934, and it bounced right off of that, and we saw that move higher. So yeah, I appreciate sharing that. Thanks for sharing that, Santiago. Really appreciate that. But All right, guys, that's it for me. I'm about to go to club bed. I gotta wake up early, so I have to go take my daughter to this appointment. Missing another stream. Like I said, I don't like it, but I guess I have to handle these responsibilities. So. But all right, guys, that's it for me tonight. We'll definitely come back tomorrow night, and we'll look for more opportunities to earn some more money. And with that said, peace out, everybody. Have a good night.